Taking a look at Bitcoin on the daily, we'll use the CME chart. We just added in the bars. We're not trading over the weekend, but as you can see, yesterday we hit the 61K level, bounced back. Today we're in between 63, 64K, all on the news of Iran attacking Israel. Now we are under that trend line, so I would expect more downside as we continue. If we can close above 65.5 tonight, we will pop back up in the channel, and there's potential for more upside. Now, if we do close below the trend line, let's say it's 64,000, we will create a gap in the CME from Friday's close to Monday's open. And a lot of times those gaps get filled. So that would put us back in the trend line. And given the halving coming up on Saturday or the end of this week, that is a short-term bullish narrative that could possibly have us seen a test of the 72,000 range, possibly even, testing the all-time high before the halving. On the weekly, we'd be looking for a close above last week's low at 67K. A close above there would at least signify more sideways and ranging in the high 60s to the low 70s before possibly trying for more upside. Now, on the flip side of that, if we would close below 67K or even, in the low 60s, I could definitely see more sideways action at that 60K level. Now, a major breakdown from that level, we would be looking at 51K as the next major area of support. Looking at the monthly, we are finally experiencing a pullback after multiple months in the green. Now, is this going to continue? Really, you're going to have to just follow the weekly trend and make sure that, we continue closing above the previous week's low. Now, if that fails to happen, we have some levels to look at. 60K is absolutely a level of interest. A lot of people think that's where we will hold in this market. Now, beyond that, I would look at 51 to 49K range as a solid level. And then, if things get real crazy, possibly 42,000 post-halving, depending on, that narrative being out the window, maybe if an ETF gets rejected or more bad news on inflation or conflicts, that could really put us at a squeeze. As you can see on the macro, we have a higher low set at around 21K and then at 26K. And, now here we are at 42K. So if you want to continue the macro trend of higher lows, I would not want to see it close below 42K.